Today's just one of those days where I'm not okay, I suppose. Well, I've been shooting for the last, I think 3-4 days non-stop, so markets are down, I'm tired, don't feel like doing a show, even though I will always do a show. By using this powerful strategy, you'll be setting over $35,000 off of your $2,000 mark. Today I want to introduce to you my favorite indicator that has never failed me. When I started in this game, I really struggled with chasing pumps. I got panicked out when the markets dipped off, and I ended up being in a yo-yo of emotions every day. I was using tons of different indicators, my charts were so busy, and to be honest, I was probably trying way too hard. Now, something you probably didn't know is that 𝗦𝘁𝗲𝗍𝗽 and I learned to trade together. We traded every single day and night, and we ended up going through a crazy journey together. She kept me grounded through all of it because my emotions were all over the place. I'd be the kamikaze that wants to learn everything and be smart, and she would take the gems out of it and balance me. So when my mom saw how I was trading, all these indicators, all the noise, she then started to kick my ass, saying, "What are you doing? You're letting your emotions get the better of you." Then 𝗦𝘁𝗲𝗍𝗽 reminded me of the Stochastic RSI indicator. She reminded me to keep it simple. She humbled me and brought me back to reality. So you can thank her for this video. If she hadn't shown me, I'd probably not be teaching you this lesson today. So the first thing we want to do is jump onto our trading view and load the Stochastic RSI indicator. So in order to do that, you want to come up to your indicator section, which is this button over here. You want to click on that, and under the search column, you're going to put stock, and you will see the stock RSI pop up over here. Now, what you want to remember to do is star it so it can fall under your favorites, so it's easy to find going in the future. Now, once you've clicked on this button, you will then see how your RSI pops up. Now, it's a very simple indicator. It may look a little bit overwhelming, but it's very easy. It is something that just goes up and down in a certain radius of 0 to 100. And you can just see how it just fluctuates like a wave. Now, the important thing to take is whenever this is over the 80% mark, which you'll see on the right, this is now considered to be overbought. It's an area now where there's been too much buying, and it's actually an area where you should be focusing on selling. Then you got the opposite side, where when it's below 20%, it is now considered oversold, where there's been tons of selling, lots of panic in the market, and you shouldn't be worried about panicking out, more looking at where can I buy. Now, if you look at this indicator to the actual chart, you'll soon see the power of it. You could see that in this area, from the bottom, we started getting a lot of green candles. The market started accelerating up in one straight line. And then on the RSI, you could see we came from an oversold position all the way up to overbought. And what happened after that? We started getting way above the 80%, the market started to slow down, and it started to reverse, showing you that this was getting too hyped up, there was too much buying, there is selling pressure coming at some point. And if you look previously at the data here as well, you'll see the same thing. From this area over here, we were overbought, we then trailed down, started to sell off, and you can see how the RSI made its way down. And if you go through all the previous data, you'll see how powerful it is. It's teaching you when the market is really run by greed right now, don't jump in because it's a trap. You could see over here how this shot all the way up to oversold. We had really strong green candles. This would have said, don't buy. We have too much buying right now. And all of a sudden the market would reverse. Now it would come down to an oversold area where you should be buying the fear, getting into the market. You'll be looking to add positions over here. And all of a sudden from that, the market then went up. And look how beautifully the market follows the RSIs. So what you're focusing here is you can see that there's two lines. And ideally what they say is when these lines cross each other is when you should start making the decision. I use it similar, but not really. What I actually do is when we get to these areas over here, I am now focused on either buying or selling. So what I mean by that is as soon as we go over the 80%, I am prepping to sell. So I dollar cost out of the market. I start selling a little bit every few hours or every day or two, and I start getting out of the market at that point. It doesn't matter if I catch the complete top or not, I know I'm selling in the right phase. And it's the same with buying. Because if you see over here, price came down here, we then started hitting the oversold, the price went slightly lower. It doesn't give you the exact area on where we're going to bounce, but it tells you're in the right zone where you should be focused on buying. So what I do is, as soon as we hit below the 20%, I started buying. And I bought a little bit more, and I bought a little bit more, until we started exiting the 20%. Then I stopped buying, because my buys now have to be in. And then all of a sudden, the market started to take off. And as soon as we got to these areas, I was making sure I was out. Now, the main thing to focus about this indicator is no-go zone, if you want to call it. Somewhere where you shouldn't be buying or selling. You mainly focus on these two areas. Now, something that can be quite confusing is all the different time frames. And I want to simplify this for you. Trading is very simple, actually. The only difference is you get different types of traders. You get guys that want to trade in the day and they only want to make money for the day. So they don't care what the market does tomorrow or in the next week. They just want to know what is happening today. So what they do is they create time frames for you for that. And the one that I use for daily is the 1 hour. So what happens here is this RSI will be telling me completely something different than other time frames. And reason being is because you're either zooming in and you mainly focus on the area or the time frame that you want to trade on. So what I use for hourly is my daily trading. I only want to know what's going to happen today. I don't care what happens tomorrow. So if I jump on this, you can see very clearly that this now is showing me an oversold position. It's showing me now that the market is now an oversold short time frame, and we can expect at some point we're going to get some buying power. So I'm looking to buy in these areas of the oversold, and I'm looking to sell in the areas of the overbought. Then we'll jump to the 4 hour, the one I was on previously. This is something that I'll use for 2 to 3 days data. I only want to trade once over the next 2-3 days. That's where the 4 hours is powerful. So it's only going to show me data relevant for that time frame. And it's the same as you make your way up. 8 hour is every 5-day trades. 12 hour, I'm looking for the next week and a half. Daily, I'm looking for the next 2 weeks, 3 weeks. So as you go through all the different RSIs, you'll see they will be different. And you want to match which RSI is with your strategy right now. I can only trade once a month? Fine. Then use the daily. Use the RSI that is equipped for what you need it for. And then it will give you a very clear picture. And you can still see on every single one of these, if you're focused on buying on the oversold, you'll be buying in this area. Now it's overbought, you'll be selling here. And you can see it doesn't matter which time frame or strategy that you use, how powerful this tool is. You just have to make sure that you are matching the right RSI or the right time frame to your specific strategy. It looks quite simple, right? It is that simple and it is that powerful. This is going to stop the emotion and it's going to get that mind of yours to stop overrunning. Your mind's going to tell you to buy. The RSI is going to tell you to sell. Your mind's going to tell you to sell. The RSI is going to tell you to buy. We have to think completely different to the rest of the world. You have to become a machine, become a system that is purely built for you. And that's how you become a successful trader. Now you have a basic understanding of how to load up the Stochastic RSI tool and a simple understanding of what it actually does. Now I'm going to show you the true power. I'm actually going to give you strategies on how to trade with this. So if we jump onto trading view, the first thing you want to make sure is that you're on the weekly candles. We're looking at a very high time frame view. Now the data that I'm showing you here is the last 4 years of Bitcoin. At the price 4 years ago, Bitcoin is around $3,500. If I bought that and I just held it throughout the last 4 years, I would basically be up by 360%, which is pretty good, right? Only if you obviously bought it at a really good price. A lot of people bought way higher. Now, if you apply this strategy, you would have made up to 1,800% in the exact same time. Now, on the long time frame strategy, when you're looking to sell, you always want to sell above the 80 to the 100% mark. That's the range that you want to look to sell at. Now, the way I use this is as soon as the lines enter the 80% mark, the trigger goes in my brain that I need to get ready to sell. Does not mean I'm selling right now. It means I'm getting prepared. I need a strategy to get out of the market. It's starting to get overheated to the top. Then you can see that you have these two lines and you can see that they cross at some points. And that is an indication for me to make sure that I've executed the trade. Now, for example, if you saw this one over here, we started to enter. As soon as we enter this 80% mark, I'm preparing to sell. As soon as we go up to that area and we cross, I'm making sure I've sold by that point, if not selling at that point of when it's happening. Now, it's the same thing when we enter down. So the only difference here is you are buying between 0 to 15%. Now we know previously we said 0 to 20. That will come on a later strategy, but for the long term, it is 0 to 15% is when I'm buying. We enter the area, I'm getting ready to buy. And by the time we have crossed those lines, I'm making sure that I've executed the actual trade. Now, if we had to take the last 4 years and we had to see all the different times we've gotten to these areas, you actually only would have traded 6 times. 4 years, you actually only would have had 6 trades, which is quite crazy, right? So now this is how you would have actually executed this strategy. 6 trades in the last 4 years. Every time we entered the bottom is where you would have bought. So for example, the first time you would have bought Bitcoin around $3,000 to $3,500. Then the market went up and we started to get to an overheated point. So you can see over here how we started to go sideways. Now we can stay in these ranges for a little bit of time at any point. That's why the cross is very important of when to make sure that you've executed. So you would have basically bought at this area, you would have held all the way to the top. And when you saw the cross, you would have made sure you would have gotten out. Now that would have equaled to a 70 to an 80% gains in that trade at that specific time. And you would have got out of the market. Then you could see after that, price kept going up. You don't care. You don't buy when price is going up. You're not chasing it. You're waiting for the next time it's oversold. And the next time it was oversold was around $7,000 in this area over here. You would have bought, you would have made another 38% until we got to that area. And you would have done this consistently as we go. Now the big important thing to understand is as the trades progressed, by the time your 4th trade came in, something crazy actually happened. You got a really good buy, which was around $10,000. Then the market exploded and you could see how the RSI made its way up to the top and it stayed there for a while. But what it ended up doing is you actually ended up selling very early, which was around $25,000 to the $30,000 mark. Never ignore it, do it. Now, if you have done that, the market still went up 200% after that. It still exploded all the way to the top. You don't care, you stick to the strategy. And you would have had to sit through all of that emotion to not listen to anyone to buy back in because your indicator was not at the bottom anytime soon. The only time that it hit the bottom again was in this area over here, which is around $36,000. That's where you would have bought. And then you would see you would have bought, you would have made 40% gains again. Market still went up higher than that. So do you see how it makes you ignore all of the emotions? Because everyone there is busy hyping and really wants to get in. No, your indicator told you to take profits and you would have taken profits at that area. Then your RSI would have reset to the bottom. You would have bought and you would have had another trade, which is up to 25% gains. And then you could see it told you to sell, get out of the market. All of a sudden the market came all the way back down to 20. So by you being consistent, you actually built a 6 out of 6 winning trade because you didn't care about being perfect at the bottom, at the top. You made money every time you traded, which was powerful. So some might see it as a loss. You didn't get all the gains. And you can see that I just see a consistent growth in my actual money. So let's say you started with $2,000. You took 6 trades, right? But the beautiful part of this is your first trade, you would have made 72%. You would have taken your account from $2,000 to $3,400 in that area just off one trade. Then you would have waited for the RSIs to get down again, and you would have taken your next trade. Now, the beautiful part of this is your next trade, your gains are off the 3,400 and not the 2,000. And you can see how it starts to compound. Every time you grow your account, your gains the next time are even bigger and even bigger. And it actually ended up by the 6th trade, we were over $35,000 off of your $2,000 mark. Now, if you just held Bitcoin in that time, you would have turned your $2,000 into $6,000. But by using this powerful strategy, you'll be sitting over $35,000 with 6 trades over the 4-year period. Now, the biggest thing to remember with this is to ignore the noise, ignore the emotion. When the indicator tells you to do something, you do it. You close the laptop and you wait for the next signal. And when it gets to the area to get back in is when you implement again. So it's very important to ignore what anyone is telling you. If you follow a simple strategy like this, you'll see how consistently you'll make a lot of money. And imagine now you go through another 6 trades of this in the next 3 years. How far can you take that $35,000? Very simple and extremely powerful.